Is Bitcoin about to crash to $55,000? Or is this just another shakeout before the next big move? Over $300 million wiped out in liquidations, fear index at extreme levels, and volatility is quietly building beneath the surface. Let's break down what's really happening. Market on edge. Bitcoin is once again at a crossroads. After swinging violently between $65,000 and $71,000, the market is showing clear signs of stress. More than $300 million in leveraged positions were liquidated in just a short period. First long positions were wiped out, then short sellers were forced to close as price rebounded. This kind of back-to-back liquidation event is not normal in a calm market. It signals instability. It signals heavy leverage, and it signals that traders are positioning aggressively for a major move. At the time of this report, Bitcoin is trading near $68,700. But beneath that surface stability, the emotional tone of the market tells a different story. The fear and greed index has dropped to 9, extreme fear territory. And historically, when fear reaches this level, something big usually follows. The $300 million liquidation shock. Let's start with what just happened. Bitcoin dropped below $66,000, triggering approximately $177 million in long liquidations. Traders who were betting on higher prices were forced out of their positions. Then, in classic Bitcoin fashion, price reversed sharply. BTC surged back above $69,000, liquidating nearly $140 million in short positions. This two-sided liquidation event reveals one critical thing. The market is being driven by leverage, not strong spot demand. When leverage dominates, price moves become exaggerated. Support and resistance levels break quickly. Volatility increases dramatically. This isn't organic accumulation. This is positioning war. And when positioning becomes crowded on both sides, volatility expands. Extreme fear. What does it actually mean? And fear and greed index reading of 9 is rare. Extreme fear does not automatically mean Bitcoin will crash further. Historically, extreme fear zones have often appeared near local bottoms, but not always the final bottom. Extreme fear tells us retail investors are hesitant, social sentiment is negative, short-term traders are defensive, volatility expectations are rising. However, fear alone does not move markets. Liquidity moves markets. And right now, liquidity is thin. Key technical levels to watch. Let's talk structure. Critical support, $63,000 to $65,000. This zone has acted as a defensive range in recent sessions. If Bitcoin revisits this region and holds, bulls may regain short-term confidence. Buyers may step in again. If this zone breaks decisively, momentum could accelerate downward. Liquidations could increase again. A move towards $60,000 becomes realistic. Major resistance, $69,000 to $71,000. This is the ceiling right now. Bitcoin has tested this range multiple times but failed to break through cleanly. If price closes above $71,000 and sustains, short sellers may unwind, momentum traders may re-enter, market sentiment could shift. But repeated rejections at resistance usually weaken buyer confidence. The market is compressing between these levels. Compression leads to expansion. Options market signaling bigger move. Options data suggests traders expect a volatility breakout soon. When implied volatility rises while price moves sideways, it signals one thing: traders are preparing for impact. This often happens before major directional moves. The longer Bitcoin remains trapped between $65K and $73K, the stronger the eventual breakout tends to be. Markets hate indecision. Eventually, one side wins. Why $55,000? Now let's address the big question. Why are analysts watching $55,000 so closely? The answer lies in realized price. Realized price represents the average price at which all Bitcoin last moved on-chain. It's often considered a structural support level in bear markets. Historically,
Bitcoin has fallen 24% to 30% below realized price before forming macro bottoms. Currently, realized price sits near $55,000. If Bitcoin were to follow historical patterns, a move toward 55K would test long-term holder conviction. A deeper drop into the low 50Ks would align with past bear cycle behavior. But here's the key difference. Bitcoin is currently still well above realized price. This means the market has not entered full capitulation territory. Long-term holders are not panicking. On-chain data shows more than 50% of Bitcoin supply remains in profit. Long-term holders are not distributing aggressively. Exchange inflows are not spiking dramatically. In true bear market capitulations, long-term holders panic. Exchange deposits surge. Supply in loss increases sharply. We are not seeing that yet. This suggests the market may be in a correction phase, not a structural collapse. Could this be a bear market? Let's define terms. A bear market typically involves lower highs and lower lows, sustained negative momentum, declining long-term moving averages, weak macro liquidity. Currently, Bitcoin is ranging, not trending downward aggressively. Structural support levels remain intact. Long-term holders remain relatively calm. This looks more like a high-volatility consolidation phase. However, if 63K breaks and fails to reclaim, bearish momentum could accelerate. The macro environment. Macro conditions matter. Interest rates remain elevated. Liquidity conditions are tighter compared to peak bull market phases. Risk assets remain sensitive to economic data. Bitcoin has increasingly correlated with global liquidity trends. If liquidity tightens further, risk appetite shrinks. Leverage unwinds. Bitcoin could face pressure. If liquidity improves, risk assets rally. Bitcoin may break resistance. Macro remains a key variable. What happens next? There are three possible scenarios. Scenario 1, bullish breakout. Bitcoin breaks above $71,000. Momentum returns. Short sellers unwind. Confidence slowly rebuilds. Scenario 2, deeper correction. Support at 63K fails. Liquidations cascade. Price targets 60K or even 55K. Scenario 3, extended sideways range. Bitcoin continues oscillating. Volatility compresses further. Market waits for macro catalyst. Historically, major bottoms take time. They form through repeated tests, emotional exhaustion, gradual accumulation, not instant V-shaped recoveries. Bitcoin is not collapsing, but it is fragile. Extreme fear, high leverage, compressed price structure, rising volatility expectations. This is a sensitive phase. If selling pressure increases, $55,000 becomes realistic. If buyers reclaim $71,000, confidence could rebuild quickly. The next few weeks and possibly months will likely determine whether this is a deeper correction or a strategic consolidation before the next expansion. One thing is certain: volatility is coming, and markets rarely stay this compressed for long.